Hi everyone, my name is Jackie, Head of Market Analyst for Trive International. Today, we will speak about the AUD NZD for the potential long opportunity. Before we go further, let's talk about fundamental. Yesterday, Credit Agricole initiated a long position on AUD NZD at 1.0722, be a TP 1.12 and SL 1.0545. Their rationale is rooted in the belief that the market is overly pricing in a rate cut by the RBA. They anticipate the RBA will define this expectation in upcoming meeting, which today, considering that both core and headline inflation remain significantly above the RBA 2 to 3% targets. Despite a drop to 4.2% year-on-year in Q4 2023, if RBA Governor Michelle Goodluck were to indicate an end to rate hike on today, she would push back against rate cut occurring anytime soon. Moreover, Credit Agricole believe now is close to peak pessimism toward the Chinese economy, and this peak will be positive for both Australian and New Zealand dollar, but more so for the Australian dollar. On the New Zealand dollar, market are believing the RBA is being overly hawkish, and the New Zealand labour market data this week could cause this hawkish stand to look even less credible. Weak unemployment growth combined with strong net migration will combine to push New Zealand unemployment rate further higher. Today we have the RBA meeting at 11:30 am GMT with a consensus anticipating the RBA to maintain the cash rate at 4.35% and defer any rate cut expectation. While the prevailing sentiment lead toward a hawkish outlook, caution is advised due to market uncertainty. It is advisable to consider entry position post-event. It is crucial to acknowledge that the potential risk to the macro idea if the RBA surprise the market deviating from expectation. Now, let's talk about the forex view. First, we will be talking about the DSM retail sentiment. According to the retail sentiment, it shows that currently, we have 84% of retail traders are on the long side, while only 60% on the short side. However, our strategy is to go against retail traders. It is crucial to recognize that they are not the primary market mover. Aligning with them can be acceptable as long as it aligns with the right macro backdrop, as we mentioned just now. Now, let's talk about the seasonality future. According to the seasonality future of Australian dollar, we can see that it's showing the bullish momentum in the near term. Similarly, New Zealand dollar also showing the bullish momentum in the near term. However, context is the more important. We cannot just rely on any data and go into the market. We need to understanding what is the latest economic development, current risk sentiment. So according to the both economic development and the risk sentiment, it should be favoring on the Australian dollar rather than New Zealand dollar. Now, let's talk about the commitment of trader. According to the commitment of trader, we can see that on the AUD, we have a positive flip on the net percent. Here is showing that a negative 3.7% flip to 3%. This means that the hedge fund, leverage fund are buying the Australian dollar. Well, now for the New Zealand dollar, it's showing the same thing. The net percent showing a positive flip from negative 12.5% to 10.6%. So we mean that the hedge fund is actually buying both Australian and New Zealand dollar. But we need to understand that COT is not a daily indicator, but rather a trend indicator. Relying solely on this data may not provide a complete picture. Instead, prioritizing an examination of the current macroeconomic backdrop is essential. Understanding the broader economic context is crucial for a comprehensive analysis rather than relying solely on historical data. Now let's go back to the chart. So this is the AUD NZD 4-hour chart. As we mentioned just now, we have the RBA meeting on 11:30. So if the result came in expectation, we might see a huge push on the AUD NZD and even break this resistance. So is the market able to break this resistance, I will be entry at here during the retest. Otherwise, if market giving us the surprise, market will be spiked down and this entire macro idea will be invalid. So thank you guys. I will see you in the next video.
Trive.